Are you running a small business, whether it's in construction, services, the restaurant field, retail, whatever, and you're in a position where your schedule is super busy? You are working like crazy, but you don't have any money. There's no money in the bank. No matter how hard you work, no matter how busy you are, you seem like you're in that same position week after week where you're wondering where the money is to pay your bills. Well, if you are in that position, then you've come to the right place. My name is Dan Murch, the owner of Blue Collar Back Office, and today I want to talk to you about a couple things that impact your business and impact your cash flow and some of the things you can be doing to take control and get a little bit of peace of mind and get a little bit more money back into your business. So, as we talk to a lot of potential clients, that is usually the number one complaint that comes up all the time. I work really hard and I don't have enough money in the bank. Why? Well, there's a couple things that really tie into that. There's typically four main factors that tie into why you are behind on your cash flow and why you're feeling that strain. Number one is the actual billing administration, getting your invoices out on time, having clear expectations for your clients, and then getting and collecting that money. Number two is taking into consideration payables that don't impact the P&L and don't impact the net operating income of the company, which we'll go through in more detail. The third thing is, are you pricing your jobs correctly? If you're not pricing your jobs correctly, even if you are getting paid on time, there's going to be a cash flow issue. And then lastly, what we're going to talk about is the difference between cash and accrual. And when you're looking at your P&L and looking at your income statement, how those numbers can really vary and how it could be a little bit deceiving in terms of understanding whether your company is profitable or not and how that ties back into your cash flow. So the first thing being your billing administration. It's really important at the beginning of a project to set clear expectations for payment terms, have them spelled out, have it on your invoicing so that everybody understands what the expectations are. But you also really need to be on top of your billing. If you're so busy working in the field every day and you're so busy doing all of the things to generate the revenue, but not handling the things in the office, then you're creating your own timeline. You're creating your own area where you're not getting paid because you're just not getting your bills out on time. So if you're completing a job this week and it's 2 weeks later before you get around to doing your billing and sending out your invoices, you're creating that gap there where you're not getting paid. And depending on the size of your business and depending on what you've set up, if you have employees in house, if you don't have terms set up with a lot of your supply houses or your vendors, you're expected to make a lot of payments on COD, immediately, or put them on your credit card. You're laying out all the money. You're paying for all the expenses, and then you're just waiting for the money to come in. That creates a lot of stress and puts a lot of pressure on the company because you're constantly in a mode of having to chase down the funds for everything that you've already paid for. Instead of shortening that window as much as possible, where you send out your invoice to your customer, the terms are clear, hopefully you're getting paid on time, and you're paying bills along the way, and everything kind of flows together instead of these wild swings where you're having to lay out a bunch of money and then waiting for it to come back in. So getting that under control is really important. The next thing is making sure that you're taking into consideration payments that the company has to make that aren't necessarily impacting your P&L. And when I talk about things like that, I'm talking about like liabilities. So for example, you go buy a new truck, you go buy a building, something like that, and you have a payment to make each month for your truck or a lease, or you buy a new piece of equipment and you financed it, or you got a small business loan, whatever the case may be. Those payments need to be made every month. But those payments are coming against a liability. They're hitting your balance sheet. They're not hitting your P&L. So you can look at your P&L and you can think that, hey, I'm generating a ton of profit. But if you're not taking into consideration the payments that you're making outside your P&L, then you don't know whether or not you're actually making any money or not. From a cash flow perspective, you could be what's called cash poor, even though you're profit rich. And that's what we want to try to get away from. We want to make sure you're kind of rich all over. All right. The next thing is pricing your jobs properly, which in future videos, we will dive deeper into how to do that. But essentially tying all of those things together, understanding what your costs are to complete a project, understanding what your overhead costs are to run your business on the day to day, taking into consideration the payments that you have to make on your liabilities, like your equipment, your vehicles, your properties, things like that, making sure that all of those things are being covered when you put together your pricing, make sure ensures that at the end of the day, when you are getting paid, that you are actually generating profit. And the last thing to take into consideration is, like I said, spending time to understand your business and taking a look at the reports. So your profit and loss statement, which includes obviously the income, the cost of goods sold required to run the project, and your overhead expenses, tells you a great deal about what's going on in your company. And I want to show you a little bit about that today. So what we have here is our QuickBooks Online sample company. It's a great tool that we use to communicate with our clients and potential clients because it's a little sandbox for us. We can come in, do whatever we want, and when we come back out, it resets. So as we're looking at the information that's in here, keep in mind this is a sample company, so give some grace, but the idea of what we want to show you is really important. So here's a typical profit and loss for this sample company that exists. Right now, we're running it on an accrual basis. And what that means in simple terms is it's based off of the invoices that you've sent out and the billing that you've received from your vendor. It doesn't necessarily tie into the money that you received or the money you paid. It's based off of what you've sent out. So from an accrual basis, this company has generated roughly $8,400 in income, and it's generated a net operating income of $3,600 and a net income of $687 after some miscellaneous expenses. Now, that's not what we're shooting for, but it's a profitable company, right? The profit's there. The company's generating income, it's generating some net operating income. There's some money positive in the company. When we switch it over to a cash basis, which again means it's based off of the money that you've actually sent out, not necessarily the money that you received, the numbers change quite a bit. So revenue is down by a significant amount, down to almost $4,700. Your net income is now down to $1,300. Your bottom line income after your miscellaneous expenses, you're now in the red. You've now lost money. So this is kind of goes back to what I was talking about earlier about the fact that you have generated profit from an operational standpoint, but from a cash flow perspective, you have not because you haven't collected that money yet. You've sent out money, you've paid your bills, but you're now waiting for it to come back. That's the type of situation that you want to make sure that you avoid as much as possible. Last piece to make sure that you're really on top of to help you understand your finances and help you understand not only where you are right now, but where things are going down the road is making sure that in addition to being on top of your receivables and processing your invoices and getting invoices out to your customers so that you can have an accurate accounts receivable list, you want to make sure you do the same thing with your payables as well. Don't just keep your bills that you get from your vendors piled up on your desk, and when you get around to paying them, you pay them. Put them into the system. Let the system work for you. Get your bills into the system. This way you can run an accurate accounts payable report. And at any given time, you can know for your company how much money you're owed, how much money you owe. And again, this helps with the foundation for understanding where you want to take your company. I'd say this to people all the time. The reason why you started your company, hopefully, is not just to make money. There's a bigger purpose. There's a why. You started it because it's something that you're really passionate about and you love it and you want to give back to the community. You started it because you want to build a legacy for your children, your grandchildren, whatever the case may be. You started it for a reason and you're really good at it. That's why you're super busy. That's why your schedule's packed. That's why the diner's full because you're really good at what you do. And that's why you're generating a lot of revenue. But if you're not focused on building the company, you can't generate the profit to get to the ultimate goal, right? Because while the number one thing for driving your business can't only be profit, your company does have to be profitable. Whatever the legacy is that you're trying to create, if the company can't keep the doors open and you can't keep paying your employees and you can't keep building your team, you're not going to reach there. So what we're trying to do is help small businesses understand the things that they need to be doing to help grow their business, help understand their finances. It's not as overly complicated as you might think. You might hate numbers, you might hate thinking about bookkeeping, but once you get the ability to kind of think about it and see it and break it down, it's not rocket science. Trust me, I'm not launching anything in the space, but what I can do is help you understand how to read a balance sheet, help you understand how to read a P&L, help you understand what your overhead is and how to build it into your pricing. And those are the types of things that we're going to keep talking about as we go throughout this video series. So there's a lot of different moving pieces that come into creating a company and creating a profitable company. And today, those four things that we talked about, your administration, making sure that you're sending your invoices out on time, making sure that you're pricing your jobs properly, making sure that you're taking all of your bills and all of your finances into consideration, and then understanding how to read your P&L. Those four things alone can really help make a difference in getting control of your cash flow. In our next videos, we'll talk more about how to make sure you're getting paid without spending a ton of time bothering your customers and spending 10 hours a week making phone calls. We'll help you understand how to be pricing your jobs so that you are profitable and the things that you need to take into consideration. And we'll help to make sure that as the year goes on and you run through different seasons of the year and different seasons of life, you're not riding the roller coaster of being cash flush and being cash poor. Thank you for your time. Look forward to talking to you again soon. Bye.